You're watching this Forex Preview video here at XM.com. We'll be exploring tomorrow's ECB meeting. I'm Christina Marujas, and joining me today is Marios Hadjikyriacos, investment analyst. Marios, we saw the Fed earlier this month unexpectedly cut rates, and the Bank of England just followed suit earlier today. Markets are expecting a rate cut by the ECB tomorrow. A 10 basis points cut is actually fully priced in. But I get the feeling that you don't agree exactly with markets. So what are you expecting to see out of tomorrow's meeting? You're expecting, instead of a rate cut, for the ECB to step up other measures.
I am. I don't think they're going to cut rates. It's a close call, but I'm in the camp that says no rate cut. So here's the argument. First of all, monetary policy is the wrong tool to address a shock like this one. Slightly lower interest rates aren't going to do magic to fix your economy. Now, indeed, we've seen the Fed and the Bank of England cut rates, but they are cutting rates much more powerfully than the ECB can cut rates. So the ECB might cut by 10 basis points tomorrow. The Bank of England and the Fed have already cut by 50. So there's a difference in ammunition, let's say, or in firepower. Now, at the same time, interest rates in the euro area are already negative, quite substantially so. And several of ECB policymakers, especially those representing the bigger economies, Germany and France, they are not really on board with cutting rates any further. They think that policy is already extremely accommodative and that any more rate cuts might even do more harm than good. So I think there's going to be a lot of conflict within the ECB about cutting rates. Now, what are they likely to do? I think they're going to introduce more targeted measures. So I think they're going to introduce some lending facilities for small and medium-sized businesses. Has your supply chain been hit in China, or is your cash flow drying up because of the virus? Here's a very cheap loan to get you through these difficult times. This isn't a real fix, it's more of like a bandage on the wound, but it does buy them some time until they figure out an actual policy response. Now, at the same time, I think they could step up the size of their QE program. Now, for the euro though, what really matters are rate cuts. If rates are not cut, then I would expect the immediate reaction in the euro to be a spike higher.
Well, speaking of the euro, we saw it rally last week. The panic in markets due to the coronavirus actually granted it haven-like qualities. Do you think, though, this is sustainable?
No, not really. I think that we might see the single currency spike higher if the ECB indeed doesn't cut rates. But after that, I'm not that optimistic. And the argument is quite simple, really. Compare the Eurozone economy to the US. The US is starting at a much stronger point, and is also proactively adding stimulus to weather the shock, to negate the impact of the shock. Now, across the Atlantic, the Eurozone is already barely growing, and the stimulus measures are not equally powerful. So I think that the US economy is likely to weather the shock much better than the Eurozone, and I think at some point we are likely to see the downtrend in euro-dollar resume.
I see. Marios, thank you for joining me today.
Thank you.
And thank you for watching this Forex Preview video here at XM.com.